I'm LaShawn Gordon, the Director of Strategic Initiatives here at UPHS, and we have some of our other colleagues on the line. But we are super excited to have with us today Adam Watson with Watson and Associates. He's one of our new partners, and we'll be working with him more and more. But today he's talking about a topic that is super important, and that's financial responsibilities as a board member. Adam is very open. He works with nonprofits all the time. So if you have questions, please feel free to put those in the chat or raise your little hand emoji, and we'll be sure to get those questions answered for you. So I'm going to turn it over to Adam, and we'll get started.
All right. Well, thank you very much, LaShawn. Appreciate the opportunity. It's a little bit of an anxious looking week for everybody. So glad you took a few minutes, and hopefully this will be worthwhile. But just kind of talking back and forth about, some topics that would be of interest, and what we came back to was just really hitting on a high level for the overall financial responsibilities for board members. We work with a lot of board members who, are passionate about the organization and want to know how to support the organization they're a part of. And just making sure that they're aware that with that come certain responsibilities. And a part of that is the financial oversight. Most organizations that we've worked with, they'll have, obviously an executive director or sometimes accounting staff. There's usually a treasurer on the board, sometimes a finance committee that's kind of helping to do this oversight. But that doesn't completely negate the rest of the board's responsibility to at least take a high level look at the financials and have a sense of what's going on and use that to kind of help overall strategic planning and the growth of the organization. I've got a PowerPoint that I'm going to share, and then I also want to put a PDF file in the chat. So I'm going to upload that now. So that should come in. So that has just some takeaways with some of the points that I'll hit on today. But also it's got some example financials. So as we're working through the slideshow, it may be helpful to be able to kind of see those financial statements in full. So hopefully that's there. And if there's not any questions, I will share this and we'll get started with the slideshow. All right. So let me see, is that visible? Okay, perfect. So let's see, just kind of jumping right in, wanted to start by just doing an introduction of the financial statements itself, what you see in a lot of the board packets, what to expect on them, what they mean, and then from there, how to kind of look at them at a high level and look for green flags, red flags, questions to potentially bring to the finance committee or bring to staff. So jumping into the statements themselves, and so on, if you're opening that PDF, this is going to be page 4, but this is the statement of financial position. For those of you that work in the for-profit world, this is similar to what you would see for a balance sheet. So this is telling you what the organization's assets are, the liabilities are, and then their net assets are. And this is always expressed at a given point in time. So if you look at the title, this statement of financial position, this is this particular one is as of August 31st. So that's telling you that's what the organization had, what it had coming to it, what it owed, and what was the remainder, those net assets on this specific date. A lot of the boards will have a package that will just have the most recent month. For me, I find it's always helpful to sort of look at things in context. So with the statement of position, it's nice to know kind of what the trajectory is. So if you've got, last month's board packet that you can sit beside this month's board packet, it can be helpful to look at that, as is the cash balance going up? Are the receivables going up? Are payables going down? Those sorts of things. So I've presented this with comparison just so you can kind of see that trajectory and see that change from period to period. But with the presentation itself, typically what you're looking at is going from your most liquid assets to your least liquid assets. So your first ones, you typically are always going to see like the operating account. That's the money that's there and that's available to use, and that's what's meant to cover operating day-to-day expenses. Under those, you're going to have the current assets, frequently, the accounts receivable, prepaid expenses, and then, depending on the investment policy of the organization, you may see some investment accounts there. Fixed assets are going to be, furniture, fixtures, material, machinery rather, equipment, real property, buildings if the organization owns that. So, the fixed assets are things that are generally meant to be owned and carried and useful for a long period of time. So whether that's, desks and computers that may be in the office for 5 or 10 years, or the building that, that may be with the organization, for decades. And then finally, at the end, you'll have other assets. So those are things that are owned that aren't really current. So in this instance, like a security deposit, that's something that theoretically the organization can get back, but that may be when they leave the building. So again, that could be years or decades down the road. So it is something that they own, but not necessarily something that's going to be useful to the organization or available to fund operations in the short term. So moving to the bottom portion of the statement of financial position. So similarly set up with liabilities, and they typically go in the order of how they're due. So your most current liabilities, your accounts payable, things that are typically going to be payable in the next 30 days or so, are listed first. Short-term debt after that. Any kind of deferred revenue, things that are going to be recognized as revenue over the course of the year, are in that current liability section. You get into long-term liabilities. So these are loans that are typically going to last more than a year. And so that shows, if the organization were to cease operations on this date, this is the debt that the organization is responsible for. And so your last section of the financials, the net assets, that's, in theory, what the remainder would be. Again, if the organization closed, if they liquidated all their accounts, sold their building, sold their property, paid off all of those liabilities, the net assets are what that surplus would be. And so from a planning purpose, this tells you a little bit about what the organization has been able to accumulate over time. And this can also be part of a discussion about, strategic growth, if there's a desire from the board or from the organization to maybe tap into some of that surplus that's been generated to fund some growth. This is where you can kind of see what that availability may be. Those are typically expressed as unrestricted net assets. So those are the ones that do not have any kind of limitations from donors or grantors. And so theoretically can be used at the board or organization's discretion. Whereas restricted net assets have some sort of tie to them. They may be restricted to a specific use by the donor. maybe a specific time that it can be used. So some examples of that would be, some of the grants will only cover very specific costs, if it's program cost or if it's staff support cost. But regardless of what that restriction is, you as a board member need to know that that's not just money that you can take and spend anywhere.
Is it comfortable? You have to like break it.
Yeah, these are comfortable. Like I like the shoes because they are comfortable. My GoPro doesn't really comfortable shoes. I've got like 4.
Let's see. So I think that covers typically what you expect to see on the statement of financial position. So jumping on, so the next statement that you'll see is the statement of activity. And again, this is similar to what you would see in the for-profit world as a profit and loss statement. This is showing the revenue that's generated from the organization, and then the expenses that it took to generate that revenue. So it's fairly common to see the revenue sort of broken into sections, and there is a point where there is kind of a big difference in not-for-profit accounting and for-profit accounting. In a for-profit environment, almost everything is a transaction. So it is there's a quid pro quo. I am paying you for a good, I am paying you for a service, and you're giving that back to me. Nonprofits typically will have program income revenue that they'll bring in a similar way. They're providing a service and they're getting paid for that service. But nonprofits also bring in money through direct donations, through fundraising. So there's not an exchange transaction that happens with that. That gets a little bit outside the scope of what we would necessarily talk about today. But there are some revenue recognition rules that come into play about when you actually see money show up on the statement of activity. And so this kind of helps you visualize where those revenue streams are coming from. So what is the organization doing to directly bring in revenue? You'll see in the program fees. What events are they putting on? So usually those are major events that are designed to bring in, large fundraising dollars versus what are just being solicited for donations that are to use for unrestricted purposes. And then lastly, typically you'll see that grant revenue. So those are funding sources the organization has gone out and identified that usually are funding specific issues, specific programs. And so that sort of just breaks down those different sections so you can see where the money is coming from for the organization. So after the revenue, you have the expenses. So these are all of the operating costs of the organization. A lot of nonprofits will sort of group this by importance. So you may see payroll cost up top. For a lot of organizations, that's their biggest expense, or program expenses, direct service to clients, things like that. But this is just sort of breaking down those categories of how the money is going out, and then ultimately getting you to a point of showing if there is a surplus or a deficit that the organization has generated through this point of the year. Let's see. So the last one that we'll see in a lot of the board packets is the statement of activity, budget versus actual. And so this is really just a restating. It's that same statement of activity report. It's the same numbers, but it's putting it in comparison with the budget that the board had approved. And so this will depend on the organization. A lot of organizations will just kind of do an annual budget, and that will stay static for the year. But there are some organizations that will do a rolling budget or do a budget modification if there are major changes. So if the board approves those changes, you'll see that change in the budget numbers. But then this is just giving you a comparison. And this is one of those areas that's a good tool for board members to look at, because again, it's giving you that context of how the organization is performing. And we'll get into this a little bit later, but so that percentage of budget becomes very important. If it's an annual budget, you're looking at how much of the year is completed. With these particular financials, we're 11 months into the year, October through August. So you just divide 11 by 12, that's 92% of the year. So then 92% is your baseline of what you're looking at. So as you're looking at the revenue, if you're less than that 92%, then it's, those categories have underperformed a little bit. And similarly, looking at the expenses, if you are over that 92%, then those are areas that have been overspent. And again, there may be questions for that. And in this example, in this case, there's an advertising expense that there was not a budget item at all. So, again, that may be something to question if there's something that had not been approved for spending, why are you seeing spending in that category? Looking at these percentages, it's very important to consider the materiality of those amounts. So again, community relations is an example. It's at 175% for the year, but ultimately it's $400 overspent. It's $1,000 spent on a budget that's just under $1 million. So it's not necessarily an expense that's going to cause a lot of heartache for the organization. However, if you're looking at payroll, if you're looking at program expenses and they're massively over, then, that would be a question about, why that number is above where it had been approved. But so let's see. So that finishes up the budget versus actual report. So just pausing a second, looking in the chat window, there was a question about how unspent revenue remaining at the end of the fiscal year is recorded. So the unspent revenue is closed out to net assets at the end of the year. Let's see. So that would go back to, it'll wind up on the statement of financial position. And what you would need to kind of look at is, the unspent revenue there, did it have any restrictions on it? If it was, for example, CSC funding that you've got a grant for, and you've got a specific contract that specific costs are covered. And in a case like that, we've worked with some clients that they have had an allowance that they can carry that money forward and spend it in the future year. But that's a restricted asset, right? So that has to fulfill the terms of the contract. That has to go towards that so you don't have to wind up paying it back. So you would record that as a restricted net asset. And then there's a procedure that you can do in the financials that you release that asset from restriction as you incur those expenses in the future year. Let's see. Okay, so that takes through, those are typically the basic reports that we see in most of the board packages for the boards that we commonly work with. So knowing what you're looking at in terms of what items are on each of the reports, from that board position, then what you can kind of look at and see, how to look at those reports and how to look at what's expected, where there may be problems, where there may be issues. So one of the things that we look at is, just kind of what that overall budget is. So this is looking on 6, 7, I think this is page 8 of that PDF, but just looking at the total budgeted expenditures for the year. So if you're looking at what the organization has sort of approved that they would spend, if you take that out and just look at it on a monthly basis, that's telling you on average, this budget, the organization would be spending, roughly $82,000. And a lot of this stuff is sort of high level and to sort of get you looking at it and get you potentially asking questions, having conversations. Obviously most organizations are not, a static 1/12 every month. There's seasonality to events, there's seasonality to program services. So, that number you would expect to fluctuate up and down, but just to give you kind of an average to look at where things are, that's sort of what you would expect to be able to cover for operating expenses. So as you're looking at your balance sheet and as you're looking at those operating funds that are available, it's a good idea to see, how liquid the organization is, how the organization is able to meet those obligations. So, again, a lot of organizations that rely on grant funding, there's a lot of times a lag in that funding coming in, and especially cash reimbursement type grants. You're spending that money first, and then you're getting reimbursed for it. So you've got to have, the cash flow there to be able to cover those costs until that revenue comes in. So when you're looking at the balance sheet and you're looking at that budget, and we've kind of looked at, okay, so if we know that we're spending about $82,000 a month, and we know that there's $261,000 in the bank, then we can see, just kind of dividing that together, the organization has about 3 months worth of liquid operating capital to cover if nothing else comes in. And so as a part of, as you're having this conversation, all boards kind of have different policies, but there's kind of a general best practice that you would want that operating reserves to be somewhere between 3 to 6 months. So again, if you're looking and it's under that, doesn't necessarily mean that there's anything wrong, but it does mean, it may be worth asking, the cash seems a little bit low. Is there an event coming up? Is there, a grant funding cycle coming up in the next month or so that's going to, help with that liquidity? So, and similarly, if you just take the snapshot of the balance sheet, you're looking at those current assets, you're looking at those current liabilities. It can be problematic if you're looking at, hey, there's not enough money in the bank to cover these upcoming expenses. So you want the assets to be over that amount. So, if you're looking at that, kind of the operating reserves, if you're in a good place there, you should be good with this as well. But this is just another kind of simple way that you can look at, if you're taking those current assets, dividing them by the current liabilities, that basically tells you, again, how long you've got to cover what's currently on the statement of position for those current liabilities. So if you're, over 1, that means you've got enough to cover it. Ideally, it should be at least 2 there. And again, just another, if you're seeing it that it's not at that threshold, that may be a question that you'd want to ask. I kind of touched on this, but just sort of looking at that budget and understanding how the budget is presented. So some organizations do a month by month budget, some of them do an annual budget. If you do an annual budget, you are always looking at it in relation to how far into the year you are. So again, with this particular example, 11 months into the year, we're 92% done. So you're kind of using that as your baseline. You know, if donations are under, you know, if it's close, you know, you understand the budget is a goal, it's something to shoot for. It may not be a big deal. If you're on a grant and it's, you know, significantly underfunded, there may be questions to ask. You know, if it's a grant that was a reimbursement, it's a grant that was dependent on, you know, number of people served, for instance. You know, is there an issue we're having? Are we not serving the number of people we thought we were going to serve? You know, are we not using those grant funds in an appropriate way so that we're not maximizing, you know, what we were entitled to receive, or as, you know, there's just a timing delay on it. So again, just a question that you can ask if it looks like there may be a problem there. So coming into it, just wanted to kind of give some oversight, again, just understanding how the organization works, understanding what else is going on, sort of informs how you look at these financials, and those questions that you may want to ask. So just some examples there. You know, if you know, the bylaws will have specific things that are required for the finances, and oftentimes there'll be financial policies. You know, it's not a bad idea to have at least some idea of what's required, what's recommended, but are the financials audited annually? Or are they required to be audited? And again, there are many nonprofits that do not have an audit, and that's not a bad thing if they're not having an audit, if they're not required to from a funding source, or from again, the bylaws, but just being aware whether or not it happens. You know, is there a CPA firm that's doing the financials versus is it being handled internally? You know, I mentioned looking at that operating reserve figure, looking at what that number is. You know, is there a stated board policy? You know, if there's a requirement for there to be 6 months of operating reserves and you see that there's only 3 months of operating reserves, again, that's a question to ask at the meeting, but it depends on what that policy is. The board also has power to, you know, designate assets for use at their discretion. So if there's been some sort of designation, you know, how is that being used? Is there a strategic purpose for it? And again, just making sure that the financials reflect that those policies are being followed. The restricted funds, you know, kind of having an understanding what's restricted, why is it restricted? You know, there are some organizations that may have endowment funding, where, you know, they can never spend down the principal of that account. And so it's, you know, it's helpful as a board member to know you may be looking at an account on the statement of financial position that can never go towards those operating costs. And so those funds have to be viewed very differently than the funds that are in the operating account and can be spent for anything. And then again, just understanding, you know, all organizations have a cash flow cycle, and, you know, there are events that happen that will, you know, inject cash in, how grants pay, how grants are invoiced, you know, all of those things. So, you know, looking at a couple of months is not necessarily a big problem, but again, if you see sort of a trend continuing, then it's something to be concerned about and to maybe ask about. So just kind of pulling all of those together, you know, looking at those financials with a critical eye from the board perspective, if you're looking at that operating capital, is there sufficient capital to cover, those upcoming expenses? It can be a red flag if you see receivables trending in an upward direction. If the organization isn't collecting the money that it's earned, what's going on? Why is there delay there? Because if that money's not in the bank, then eventually that's going to cause problems. On the other hand, if the accounts payable are going up, if the organization is not able to make its bills for the month, and you're seeing those trend up, that could be a reason for concern. And a big red flag is if you're looking at those statements and you see a liability pop up that wasn't there before. If there's a line of credit that's come into play that, had not been previously discussed or previously approved, or, other debt that's appearing, there needs to be a reason, and unless it's a very minor thing, a payable, there should have been discussion or approval about, what, approval process happened to allow the organization to be obligated to that debt. So if you see something popping up there that's not expected, that's definitely a question. And then, lastly, again, looking at that budget versus actual report, understanding, the budget is a thought of what's going to happen, things change, but if there are major variances, is there a reasonable explanation for it? And sometimes it's as simple as, there was a expectation that there were grant funds coming from the state, and as the budget went through, that didn't happen. So there may be budgeted funds there that are never going to come in, but that can trigger other conversation. If it was a major source of funding, has the budget been updated otherwise? If we're not going to have that revenue come in, how are we handling that? Do we have other funding sources to replace it? Are we looking at cutting costs to offset that? So sort of understanding how those numbers are working together, again, at least can raise questions. If it's not there, how's it being addressed? So that was really all I had in terms of the presentation. There weren't a lot of questions I saw in the chat. Is there anything anybody had questions or conversation to follow up on?
Thank you, Adam. Very informative. So the floor is open now. Yes, we will make sure that you get the presentation. And remember, Adam put a PDF in the chat of the presentation and kind of a handout with some tips and tools. But the floor is open now. Do we have any questions?
Hello, this is Desiree. I think someone's already actually put it in the chat as far as getting a copy of the presentation since it was recorded.
Yes, and if you click on that PDF, he actually put a link in there for you all to be able to pull it up, and there's like kind of like a handout as well. It was kind of at the beginning of the presentation.
Is that
So if you can see it, he posted it at 2:04.
I don't have that one.
Okay, let's see. I don't know if that would, if people came in late, if they would get it. So let me
Okay.
put that there again. So I'm uploading it now into the chat.
All right, can we see that? All right. Any other questions or comments? So again, just to recap, Adam's contact information is on the screen. the presentation, he just put the link in the chat. So we're going to leave it there for a minute. Feel free to click on it and download it. Of course, we did record it, so Justin will make it available on our social media, and it will be available on our YouTube channel as well. But this is a very, very important topic. He covered a lot of fiscal tools and tips and just overall responsibilities for board members, because ultimately, if you're sitting on a board, you are responsible for the financial well-being of the organization. So we want to thank Adam for his time. I know a lot of you all, we have suggested that you reach out to some of our CPA partners, and Adam is definitely one of our partners. And so his contact information is available. He works with a lot of our nonprofits in the community, and both he and his team are very knowledgeable. Ms. K posted, Adam, is retained earnings like restricted earnings?
Well, so retained earnings is kind of the for-profit equivalent to the net assets. So, and this is especially if you're doing your bookkeeping in QuickBooks, which most of our nonprofit clients are, there are some limitations with, QuickBooks is I think more designed for-profit entities. So there are some areas where we have to, sort of set up accounts and manually make some entries to report it accurately. So the retained earnings is net assets. It's the same thing, but QuickBooks doesn't really have a native way to sort of break that down between restricted and unrestricted net assets. So usually, we will try and have an account set up for restricted activity. So if you look in the handout, on the statement of activity or the statement of activity, the budget versus actual, there's an other line item that's revenue that's restricted as to time or purpose. So what that's reporting is that's revenue that's been received during this current fiscal year, but there is some sort of restriction that's still attached to it. How it's to be spent, when it can be used, whatever that restriction is. So in theory, those restricted assets or that restricted revenue at the end of the year would contribute to the restricted net asset figure, if that makes sense. And then you have to kind of track it after the fiscal year. You have to adjust it for, as it's spent down over time.
Thank you. Any other questions? All right, well, we're going to give you all a little time back to hopefully prepare for the storm. There's all kind of weather briefs out there. But once again, we will make sure that you get a copy of the presentation. And again, Adam's contact information is on the screen. Feel free to take a picture of that with your phone. And if you need anything over the next couple of days, our team will be out of the office starting at 12 tomorrow, but we will be available via phone and email. So be safe, and we will see you all soon. And thanks again, Adam.
Absolutely. You're very welcome.
Bye, y'all.